Welcome to this Killick Explains video, and in slightly more uncertain economic times, as I make this video in September 2023, there are press rumours around the state of the economy, Chinese demand slowing and so on. I thought what I should talk about is the pros and cons of cash. Now, I've spoken about this before, but I think it's worth a recap and to give you some food for thought around how much you might need to hold. So obviously it is tempting to hold a bit more cash now. Quite a few people are doing that. Interest rates have risen. So all of a sudden, literally as I make this video, it is possible to get in excess of 5% as a gross return on cash. That has not been the case for many years. Now, whilst that is not the rate of inflation, it is at least some compensation for the fact prices have risen. In times of uncertainty, naturally enough, people think about weighting up the amount of cash they hold. And of course, we've got a degree of volatility. Whilst stock markets, for example, have resisted all the recession talk quite nicely, nonetheless, prices are prone to swing around. So how useful is cash and how much is the right amount to hold? Now, I can answer the first question fairly easily. The second one will come down to a degree to personal preference and circumstances. So the advantages of cash, and frankly, for many, many years when inflation and interest rates were on the floor, it didn't have very many advantages. It has a few more now. It's a very simple asset to manage on the whole. It is visible in terms of the returns that you earn. In other words, you're not waiting for a speculative, uncertain capital gain. You get, very simply speaking, an interest rate, and provided the bank or the provider doesn't go bust, that's reasonably well locked in. It's a liquid asset, which is just a posh way of saying you can get access to it. Now, there are some conditions, some caveats. If you lock money away for a term deposit, for example, you may pay a penalty, assuming you can get it back, but broadly speaking, it's liquid and it's relatively safe, subject to staying under the FCS limits, which I'll come back to in a moment. So why do we hold cash? So we think it's a sensible part of an overall investment strategy. Well, there are at least three situations where cash is potentially useful as a rainy day fund. So 3 to 6 months of net spending if you are by yourself, for example, or perhaps in a couple with no kids. If you're responsible for a family, maybe 6 to 12 is more sensible now. It's opportunistic. So some people who are investors like to hold cash because they recognise that when markets are a little bit more volatile, some shares get marked down because markets panic and they like to be able to take advantage. So there's another reason. And of course, risk. So my father-in-law, who's in his 80s, has turned quite a lot of his investments into cash, reckoning that he can secure the minimum income that he needs by doing so. So why take any further risk? Now, the downsides. Why isn't everybody just converting everything into cash, which would be a bad idea? First of all, there is no possibility of a capital gain. There is no growth portfolio with cash in the same way as you get long-term with something like the stock market. Equally, although a rate at the time I made this video of say 5% sounds great, that's not enough to keep most people ahead of inflation or even at the rate of inflation. So it's good but no cigar. If you like, for inflation proofing, we need to look elsewhere. And your purchasing power, to make the point, is destroyed by cash over time, most of the time, with very few exceptions. So imagine, for example, and here's an example that I have given 1 or 2 times before, you had £100 in notes in 1970. You decided to simply stuff that under the mattress and then wait. And today, you pull it back out again in what you can buy, purchasing power terms, as economists call it, that's worth about £6. Hang on a minute, you said it was £100. Yeah, but not in terms of what it'll now buy. Why? Because of the silent effect of inflation pushing up prices all that time while the money's been tucked under the mattress. So it needs to be more than £100 now, and that's the point about investing. So in terms of a strategy, this leaves people thinking, well, I get the uses of cash. I get that it's not a terribly good inflation hedge. So how much do I hold? Well, there's a conversation worth having, family, friends, an advisor, or whoever. The amount of rainy day money you hold, for example, will depend on your circumstances. It'll depend on your risk aversion. It'll depend on to what extent you feel you would like to take advantage of buying opportunities when there are dips, as inevitably there tend to be at times like this. You want to also keep an eye on the maximum amount that's sheltered by the Financial Services Compensation Scheme, around £85,000. It is a good idea to spread your funds around, and there are some platforms that can allow you to do that fairly easily. And another thing to think about is actually, could I get similar protection and a similar profile from something else? So bonds, for example, really safe government IOUs, offer a locked-in return over time. They offer a fixed redemption date. So for people thinking about amounts they may have to pay a little bit further out, that can offer another alternative to cash with potentially a slightly better net yield to boot. In short then, be a little bit brave when others are fearful. Don't turn everything into cash and sit on it, because you will get poorer at pace without even realising it thanks to inflation. But it is sensible right now to revisit that issue of how much do I actually need. Now, I've covered a lot of ground there, so do feel free to go to the library, killick.com/learn. Series of tabs down here, Investing Principles is not a bad one. If you'd like to read some more about inflation proofing your long-term investment strategy, there's a series of guides. One of them is called How to Invest in Equities. There's a section in there. There's another guide about generating income once you stop work. So that will be editor@killick.com. And Confidant, our quarterly magazine, which I edit, also usually contains something around this topic, and/or bonds, which I mentioned here. And that again would be editor@killick.com.